Hi, this is Sive Morten with the daily update on EURUSD. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody, guys. Today again we'll take a look at the euro currency. Actually on Friday morning I thought that hardly we will find any object for discussion on euro currency because if you remember in our Friday video, euro stands very close to the previous top, and it was seemed that indeed the breakout could happen, that could change overall setup, and it's probably some time should pass before we will find any opportunities to take the position. And I thought that it seems that maybe something else we should discuss in our weekly research, but Friday action was really surprising, and it seems that some artificial money flow stands beyond of this action, since on Friday, if you remember, we didn't have any significant information, significant news or statistics or something of that sort. It was just a reversal down of the previous action. So whatever it was, a huge volatility lets euro to keep our bearish scenario valid. And taking into consideration all the stuff that have been formed on Friday, this setup that we've got previously, I mean bearish opportunity to go bearish scenario, we said that probably euro should show deep retracement. This scenario has become even stronger. On Friday, euro clearly has shown that some kind of inability of the market to break through the 125 top. It has made an attempt to go higher but has failed and significantly has dropped. And as a result, we have three important issues for euro currency in the short term. First of all, it was the wash and rinse of the previous top. This is Judd Napoli term. It has the bearish background, and it means that market just has moved above this top, grabbed the stops here and turned down. This is the bearish pattern. Second moment is the bearish reversal session. So take a look, that market has created the new top and close below the lows of the previous session. So usually this action can't finish just in the blink of an eye, and usually has the continuation, especially when it forms right at the previous tops. Finally, take a look what has happened with the trend action. So market on Thursday has turned trend bullish, and we said currently, guys, we do not have theoretical reasons to go short because trend has changed, and we do not have any clear bearish patterns. That's why currently it's better to sit on the hands and see what will happen next. Because if market will break this top and will hold above these tops, it will mean probably that upward action should continue. If not, then probably it will be some kind of the inability, the failure of the market to pass through it. What we really have got. So, and on Friday, market has turned trend bearish again. So on the daily chart, we still have bearish confirmed trend. And this action, guys, I usually call as the 2-day stop grabber. When the market turned trend in one session and returned it back in another. So my experience tells that very often this combination works as the simple stop grabber. It means that market could drop further. So currently, guys, taking in consideration all this construction, I will not exclude the chance of the possible forming of the double top here. This could become the first top, this could become the second. So following this logic, as the possible grabber that I have described, reversal session, as possible double top, it seems that the next destination point, logical destination point for the euro will be the bottom. It's around 122 lows. Besides, if you will check the oversold, you will see that euro oversold approximately this area. So here is where the neckline, the potential double top pattern could stand. Why I'm talking about the double top? It's just because the wash and rinse of the second top is very typical for this pattern. So when the market washes the extremes of the previous potential top or bottom, So that's very typical. That's why I think that maybe it indeed could happen. So it means daily chart tells that we have the bearish context in the short-term perspective on the euro currency right now. So again, we could think about it going short. Now is the question how to do this relatively painless. So on the 4-hour time frame chart, we see that market is coming to the major 50% support that stands in the 123.80 area. It's very probable that some bounce here could happen, because take a look also, it will be kind of the previous support resistance, natural support resistance area. This market was standing, this was support, breakout, again support, this was resistance, and again this will be support. So here we could get some bounce up from this area. So this is, as you know, 50% levels is the favorable levels for the euro currency. It likes to it's uses very often as the support resistance. It's 50% level. That's the first moment that we will be watching for. It's 123.80. So approximately here, market should give us some response in this area with some bounce. We intend to use this bounce for taking the short position. And if you'll take a look at the hourly chart, you will see that this drop on the hourly chart represents very good thrusting action. So it's quite sufficient for Joe Napoli bread and butter trade. So take a look, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. So sufficient number of candles for the bread and butter. Retracement up should reach one of the levels. So first is the 3-8 resistance, 24.55. Next is the 50% as well, 24.74. I suspect that if bread and butter will start down, it will start either from this level or from that level. In favor of this level also tells that this is 50%, and also that here it's also some kind of a consolidation. You can see it also was previously resistance, breakout, support, so natural consolidation stands around this area. But that will be able to estimate it more precisely when you will drop your time frame to the 5-minute chart. If our prediction will start, you could calculate any A, B cities here to the upside. Maybe it's some kind of the butterfly will be formed that will point on the clear level, whether here or here. This probably will take within the sessions or two when we will see what will happen. But the idea is that to use this retracement and background of the bread and butter for taking the short position, because bread and butter provides relatively safe entry. If even we will become wrong later, market indeed will start upward action. Bread and butter should lead to some minor response here to the downside. So market should show at least the 618 retracement back of this possible upward action. And that will let us to move our stops to the break-even. That's why I think that it's really relatively safe opportunity to go short. Because even if we will be wrong, we will have the good opportunity to finish this trade with no loss. That's very good. But our major target, guys, here is not just minor bread and butter trade, but by keeping the whole picture in our head, we suspect that we would like to position ourselves for significant action down. So you should decide by yourself what the perspective you will use. Either just bread and butter trade if you're a scalp trader, or maybe you will position yourself till the bottom, till the 122 area, to the neckline. Maybe others who trade on the long-term perspective, maybe you will keep the positions longer with the breakout of this area, because as you know, our second scenario suggests action probably to the 116 area. It's also possible. Well, this depends on your trading style, on your personal approach to the market, so how you trade usually. But the idea stands as follows. So using this bread and butter with the attempt to go short, and let's provide relatively safe opportunity to do this. Is using of this thrust down and momentum impulse down to position ourselves for the to the downside action based on the Jordan Apple and bread and butter directional pattern. So and finally, final moment, that why I suspect that this retracement should be not very deep, not the 618 maybe. Well, if we will be correct with this double top pattern, usually on the slope of the second top, market very rare shows deep retracements. So deep retracements actually already has happened. So you can see here was first spike, deep retracement here down, deep action again. So here I think that's relatively free space to this area. Besides, as you can see on the 4-hour time frame chart market, or better still on the hourly chart, market here previously had the chance to form the hand shoulder, as you can see. So it could become left shoulder, head, right shoulder, but it hasn't done this, although it was logical. So after strong rally on the first drop, it should be deep retracement. But it hasn't happened. Market just collapsed for this area and shows no response to actually reversal swing. That's why it seems that 50%, I think this will be sufficient here. And I think that bread body will start something from 38 or 50% levels. Hardly we will see here a deep retracement. But again, we will see now this trading plan, as you can see. So we will keep an eye on this and how it will develop.